All right. Welcome, everyone, to tonight's meetup where we're going to be talking about crypto tax. So for all of you that are new to the industry and don't know a whole lot about crypto and tax, you're definitely in the right space. If you are jumping in, please keep yourselves muted unless you have a question. We are going to open up for some Q&A. I also encourage you, if you have a question, to pop it in the chat as we go along. Either Nick might stop and answer it there and then, or we can circle back and we can answer them. But this is the session where it's all about you getting some of your questions answered. So for those of you that don't know me, my name is Danielle Marie. I am a Web3 educator and community builder. I am the head trainer for TAFE Queensland, delivering the accredited blockchain courses. And I'm the founder, or one of the founding members, of All Things Blockchain, which is the group that you're here. We host and organize lots of different types of meetups, from online to in person. And I am also recently launched a new project called the Women Digital Economy, which is a very exciting project which focuses on bringing more women into the ecosystem through the 3 pillars of mentorship, education, and community building. So that's a little bit about me. Anyone that's interested in learning more and getting involved in the community, please reach out to me. LinkedIn is generally the best, Danielle Marie on LinkedIn. But enough about me. Let's get in and start talking about crypto tax. So Nick, you probably can introduce yourself better than I can, but I've known Nick for, gosh, quite a few years now. Started off as COVID Tax. COVID Tax are actually my tax accountants. I've been using them for years. And then they've gone and created Syla, which is the software accounting software for tax purposes, and he's probably gonna do a lot better job of explaining it than I am. And so anybody that needs a crypto tax accountant, I highly recommend them. I personally use them. And we also do have a discount code for all of the ATBA members that we'll be sharing with you at the end. So Nick, I'm gonna hand it over to you.
Thanks, Danielle. I'm just going to bring up my screen and we can sort of jump into it. Yeah, for those of you who haven't met me before, my name's Nick. I'm one of the co-founders of Syla, which is a software product for calculating crypto taxes. And that's obviously what we're going to be talking about today. Just before we get started, yeah, so that's me, that's Nick. I've sort of been in the space, tax and technology, for the last 15 years. I've been involved in cryptocurrency for about the last 6 years now. And yeah, we've really brought this product, which is Syla, to help automate doing the tax calculations. So what is Syla? Syla is a software product. So this is a tool, and I'm going to show you a quick demo of this a little bit later as well, that you can use to basically like import all of your transactions, and then the tax calculations are automated for you. And then you can generate a report that you can use to lodge your tax return. As we go, we're going to be doing today a little bit of sort of like the theory, like how we actually do calculations for capital gains. And then we're also going to do something a little bit more practical as well. Like Danielle said, any questions that you have as we go, please, pop them into the chat, or at the end, if you want to talk and ask a question as well, we can go through those. So we have a smaller group today. Totally happy to try and answer as many questions that you have, towards the end there as well. So Syla, basically our tax software is very specific for Australia. So we don't do tax anywhere else around the world, just for Australian tax law. It's very good value. So for $59, basically that's an annual subscription. You can sign up. If you have up to 10,000 transactions, you can import all of those and do the tax calculations. And also what I'm going to show you a little bit later is what we call LTFO. This is a special type of parcel matching method, which probably no one understands what that means yet, but I'm going to show you what that means as well. Basically, it's a special algorithm that you can use to help lower your tax outcomes. So what we're going to go through today is sort of the basics of what is crypto tax, firstly, how to actually calculate capital gains tax. So I'm going to show you some actual physical calculations, some ways on how you can actually save tax, a practical demo in the software Syla, and then any Q&A at the end as well. So any questions that you want to ask, we'll go through those as well. So what is crypto tax? Basically, the way that tax works in Australia, there's a lot of tax legislation. The main piece is called the Income Tax Assessment Act. It's a very complicated piece of legislation. It's over 5,500 pages. But basically, at the end of the day, our tax system works in a way where if you've managed to increase your wealth in some manner, then our tax law basically has a way to ensure that you eventually have to pay tax on that. And that includes your crypto investments. And we'll show you how that works. So what is cryptocurrency for tax purposes? Basically, cryptocurrency is a type of CGT asset, which is similar to shares. And for CGT assets, provided you're undertaking an investment activity, so that's where you purchase an asset for like long-term growth, those CGT assets are subject to capital gains tax. So that's like the basic form of tax on your cryptocurrency investments. So what we usually calculate are things like what are the capital gains and losses on your cryptocurrency. And then we also take into account something called the CGT discount, which basically means if you've held the asset for over 12 months, you may be eligible to apply a 50% CGT discount if you're an individual, or 1/3 discount if you are self-managed super funds. So a capital gain occurs only when there's actually a CGT event. And a CGT event is anytime you basically had your cryptocurrency and then you got rid of it. So the normal way that happens is if you purchased your crypto and then you sold it, but it can also occur if, for example, you had your cryptocurrency and you swapped it for another cryptocurrency. Or if you took your cryptocurrency and you gifted it to someone else, or if you use the cryptocurrency to pay for some brokerage fees or network fees or something like that. These are all forms of a CGT event. And that's the point in time where you have to calculate what the gain or loss on the cryptocurrency is. Basically, whenever you had cryptocurrency and now you no longer have it, that's called a CGT event. And that's the point in time where you have to calculate and do these calculations. We're going to go through now the actual examples. So these are some really simple examples, but it helps you to build a little bit of an understanding about how those capital gains calculations are actually done. So this is the first example. It's called buy and hold. So this is what happens when you just, the first step is you deposit your cash, for example. Let's say you got 10,000 Australian dollars. You sign up to a digital currency exchange and you deposit it onto the platform. And then you take that cash and you use it to buy 1 Bitcoin, for example. That's when we start to track the cryptocurrency for tax purposes. So we say you now have 1 Bitcoin and the cost base is that amount that you paid for it, which was $10,000. Then if you don't do anything else and we get to the end of the financial year, so 30th of June, and you still have that 1 Bitcoin sitting in your portfolio, even if it's gone up in value, there's not going to be any tax outcomes. That's because there was no CGT event. You never sold the Bitcoin that you purchased. So even though you have what's called an unrealized capital gain, you haven't actually sold it yet. So you don't have to declare that gain until it actually occurs. So this is actually a good sort of strategy as well for long-term wealth creation. If you just buy and hold any form of CGT asset, including cryptocurrency, then you actually won't pay any tax until you actually sell or dispose of it. The next example is when you purchase the cryptocurrency and then you decide to sell it. So this is the same example where you purchase that 1 Bitcoin, but then a little bit later in the year, so around 6 months later, you decide to sell it this time. And in this example, you've sold the 1 Bitcoin, and in return, you got 50,000 Australian dollars. So this is the CGT event when you sold it. We track this event and say that this is the proceeds from the sale. And the proceeds is what you sort of got in return, in this case, 50,000 Australian dollars. And then when you get to the end of the financial year, you still got that $50,000 cash sitting on your account, and you have to work out what the tax outcomes are. So this is where we do the CGT calculation to work out what the actual capital gain is. So to work out the capital gain, you have to take the proceeds from the sale, which in this case is 50,000 Australian dollars, and then subtract from that the cost base, which is the amount that you originally paid for it. So basically, it's like you can think of it as how much did the value of the cryptocurrency I purchased go up and then sold. So in this case, the difference is $40,000. This is your capital gain, and this is what you would have to declare on your tax return as a form of assessable income. In this example, you can see that it wasn't held for longer than 12 months. So this CGT discount, which is sort of like a special tax rule that you can apply, doesn't get applied in this example because it was only held for around 6 months. In the next example, imagine everything is the same, but instead of selling within 6 months, you actually wait a little bit longer and sell later. In this example, it's 18 months later. So you actually held on to it until the end of the next financial year, and then you decided to sell. In this example, the asset was held for over 12 months. So if you're an individual, that means this capital gain would be eligible for the CGT discount. The way that you would calculate the tax outcomes in this case is it's the same capital gain of $40,000, but you get to apply the 50% CGT discount on the net capital gains. So in this case, you would reduce that amount by 20,000, and then you have the resulting assessable income that you have to declare of 20,000. So you can see when the CGT discount was applied that the net tax outcomes are a lot better. There's also the sort of case where you might have purchased cryptocurrency, but it's gone down in value. So in this example, imagine you purchased it still for 10,000, but when you sold it, it went down in value. So now when you sold it, you only got $1,000 in return. When you do the tax calculation, it's the same calculation where you take the proceeds from the sale, which is the $1,000, and how much you originally purchased it from. And the difference in this case is what's going to be called the capital loss. So this is how much your investment went down in value between when you purchased it and when you sold it. In this example, there's no assessable income that you're going to have to declare from the sale, but you will get to do something which is called a carry forward capital loss. So you actually get to claim this loss. And that's something that's quite important for this financial year that's just passed, is that a lot of people are sitting on losses for some of those investments. It's important to actually declare them, because in the future years, when you do have a capital gain, or if you have capital gains from other sources, say from your shares or property, you actually get to offset those gains with your capital losses. And you get to carry forward that capital loss into the future for as long as you basically want to, until you actually get to use them to offset something. So this is another great way to sort of capture those capital losses and then get to utilize them in the future. The next thing is something we call like the parcel dilemma. And the easiest way to do this is to show you as an example of what we mean, because this is where we start to get into some of the tax optimization strategies. You can imagine it's the same example as before, where you took $10,000 and you purchased 1 Bitcoin. So the cost base of that 1 Bitcoin, which is how much you paid for it, is the 10,000, right? But then imagine you a few months later decide to purchase another Bitcoin. And of course, the price is changing all the time. And in this example, you can imagine the price of Bitcoin has gone up. So you had to pay more to purchase 1 Bitcoin. In this case, you had to pay 40,000. So now you have 1 Bitcoin that you purchased for 10,000, and you have a second 1 Bitcoin that you've purchased for 40,000. And then you decide a little bit later again to sell this 1 Bitcoin, right? And in this case, the market went up again a little bit again. So you sold it for 50,000. When you come to do the tax calculations, it's still the same calculation. So you have to take the proceeds from the sale, which is 50,000. And then if you look at the rule, you have to say, okay, but what's the cost base? And the issue is, like, which 1 Bitcoin did you sell? Did you sell the one that you purchased for 10,000, or did you sell the one that you purchased for 40,000? because depending which one you purchase, the tax outcome can actually be really different. If you choose the first one as the one that you sold, then the gain's going to be 40,000. Whereas if you choose to sell the second one that you purchased, the gain's only going to be 10,000. So that's a huge difference for your tax outcomes, depending which one you actually select. In Australia, you're actually allowed to completely freely pick and choose which parcel that you want to sell. These are what's known as like parcel methods. So the one that you might have heard about before is like first in, first out. So this is an algorithm where you pick the first one that you purchased, that's the one that you sold. There's also what's called last in, first out. So whichever is the last one that you purchased, that's the one you're going to say that you sold. There's also another method that we support in Syla called highest in, first out. So this is sort of an attempt at tax optimization because you want to sell the one that you always paid the most for. That's the one that you will sell. And then we have what we call lowest tax first out, which basically looks at all the different parcels. So in the example, like all the little pieces of Bitcoin or other crypto that you purchased, and we choose the corresponding parcel that would actually produce the lower tax outcome for you at the end of the day, which is probably what most of us want. So this is what we call lowest tax first out. And it's a way of actually optimizing for better tax outcomes, which is fantastic.
Hey, Nick, before you move on, I have a question in regards to these parcels and picking them. How, like, is that just based on the parcels, like the transactions? Like, because it's not like every time you buy a Bitcoin, it's sitting in a different, segment within your account. So do you go based off of the transaction ID? Like you'd go and be like, okay, is that what you mean by parcel?
Yeah, the way that it works is it's based on your own record keeping system. So you're exactly right. There's no way to know which one Bitcoin is which one Bitcoin, right? Because they're all fungible and they're not uniquely identified anywhere. So you don't know when you sell one, which exact one it was that you sold. And of course, sometimes you might be selling half a Bitcoin or 0.001 of a Bitcoin. So there's lots of these different scenarios. The way it works is it's up to you. You put in place a record keeping system where you keep track of all the parcels. So basically every quantity of each cryptocurrency that you purchase, you record those along with the date. And then when you sell it, you also record those and you basically choose like which one did I sell this time and which one did I sell this time. And this is really quite tedious to do by hands. And this is what the software, so this is what Syla does, is it has that record keeping system done internally where we track all of those purchases. So from the very beginning, you purchase this one for this amount, we record that. So we track all of those. And then all the sales that you have, we track all of those. And then we match those together using one of these algorithms, depending which one you choose.
Interesting. Thank you.
Cool. I'm just going to show you, to show and explain sort of a difference between all of these. I guess, Danielle, as well, for your question, you can sort of think of this sort of like the record, right? So you can see here. Then imagine you've then purchased an additional one Bitcoin for $20,000, right? So then we'll also start to record that. Then, a year or so later, you've now purchased another Bitcoin. This time the price has changed. Now it's $25,000. So we also record that. And then finally, in this example, there's one Bitcoin that you've purchased for $15,000. So we'd also record that one as well. And then eventually, as you've been purchasing all these, units or parcels of Bitcoin, at some point you're going to want to sell them. And in this example, the market went up, so you sold it for a profit, which is fantastic. And then it's the same question. Okay, is it the first one that I sold, the second one, the third one, or the fourth one? And basically, if you have that record keeping system, it's up to you. You get to choose which one. And that's really what those parcel matching methods do, is it's like a consistent sort of algorithm or strategy for choosing which one and keeping track of that in the software. So if you apply that first method, first in, first out, then it's going to pick the first parcel that you purchase because that's the earliest one that you bought. So if we do the calculation and go, okay, I sold it for 50,000, but I purchased it for 5,000. So the difference is 45,000. That's my gain. But because it was held for a long period of time, if you apply the discount, now it's only 22,500 that you have to sort of declare, right? If you use the last in, first out method, then it's the last one that you purchased, the most recent one. In this case, if you do the same calculation, you know, it went up in value by 35,000. That's the capital gain that you'll need to declare. If you pick the highest in, first out strategy, then you pick the one that you paid the most for. So you can see out of all those options, you paid the most for this one Bitcoin. So you paid 25,000. So that's the one that you pick. Then the gain in this example is 25,000. Or if you use lowest tax first out, it actually looks through all those different options. And in this case, it decided to pick that second parcel, because when you do the calculation, the difference between 50,000 and 20,000 is 30,000, but it's eligible for the CGT discount. So the sort of net gain that you get at the end of the day is only 15,000. So it's a bit more sort of intelligent about how it goes through all those different options and picks the one that actually gives you a lower tax outcome at the end. You might be thinking, like, is it common that there's like all these different parcels that you've purchased? I think in practice, we see this a lot. For example, if you're dollar cost averaging and buying into an asset over a long period of time, then of course, as the market moves, you're purchasing, you know, different amounts at different dates and different prices. So you will have basically like this, you know, in your records, this spreadsheet of all these different parcels you purchased at different prices. So when you do eventually start to sell some of them, you can get really good advantage out of, you know, choosing different parcel methods and using something that will pick the one that gives you a better tax outcome, which is a really good idea. So what we were talking about just then was all about capital gains. So this is where you purchase an asset, it goes up in value, and then you sell it. And then you have to work out how much did it go up in value so that I can declare the capital gain amount. There's actually also other sources of income. So capital gains isn't the only type of income in our tax law. The other common type is something that's called ordinary income. So for example, your salary or wages. But what you would see in the crypto space is that most investors actually do have one source of ordinary income as well. So this is from things like if you participated in an earn program on one of the digital currency exchanges in Australia or overseas, if you received any sort of distributions or commissions or airdrops, most of these are going to be sources of ordinary income. And the way that works is you have to calculate the market value when you received it, and then you declare that as a source of ordinary income on your tax return. So Syla is also able to capture these sources as well. You just say that, hey, you know, this was earned due to interest, and then we'll apply that correct tax treatment for you. Correspondingly, the good thing is if you do have sources of ordinary income, then it's often the case that you're allowed to claim fees and costs that you've incurred that are related to an income-producing activity. So things like withdrawal fees, deposit fees, network fees, these are often expenses that you can immediately deduct, provided they're related to an income-producing activity. So these are also captured as well. So this is a way that you can reduce your tax bill, you know, those fees that you want to claim. There is one note here, which is about the brokerage fees. So when you pay for crypto, when you buy it or you sell it, and there's like a fee attached to it, this is usually capitalized into the cost base. So we didn't go through that example where that's done because it's a little bit more complicated. But it basically means if the fee is capitalized into the cost base, you don't also get to claim that as a deductible expense as well. So you usually only get to claim it one way. We're about to jump into sort of the demo now. So just to introduce again, like sort of what is Syla. Basically, like you probably don't want to do, if you've got like 4, you know, sort of like a handful, maybe less than 10 sort of trades that you made, then maybe you want to do those CGT calculations yourself. It might be possible. But the calculations are actually really quite tedious. So that's why software like Syla exists, to make that a lot easier. The way it works is you can basically like sync your data either through an API connection, or you can upload a transaction export of your trades into Syla, and then we do the calculations. Syla is sort of all our integrations for the Australian exchanges. So these are our sort of major Australian partners that we have done partnerships with: CoinSpot, CoinJar, BTC Markets, Digital Surge, CoinStash, CryptoSpends. We also have a lot of other platforms that we support. So it's not just those 6. We support a lot of other ones. They're just sort of our major partners that we've done very high sort of quality integrations for, so that the data all comes in really smoothly. And we can classify all those transactions automatically and make sure that the experience is really sort of simple and straightforward, which is great. So I'm going to swap over to my browser to sort of show you a demo now of Syla. Let me just do that now. But if there's any sort of questions, like feel free to pop them into the chat. The demo is pretty quick, and then we can sort of go through some of that Q&A after as well. Let me just swap over my screen now. Okay, great. So what you should be able to see now is my screen. So this is what Syla looks like once you've signed up an account, which is really simple, and you've logged in. You normally land on this page, which is the data sources page. So there's no information in the account yet, and that's what I'm going to show you now. So the way it works is for each of your exchanges, we call those data sources. So what you do is you come up here, you click add data source, and here is where you can search through all the different exchange platforms that we support, along with any sort of wallets or other services that you've used. And you can just sort of like type this in as well. So if you're looking for your CoinSpot exchange, for example, you just type that in, it should pop up, and you just click it. And then what we show you in Syla is usually there's 2 different methods on how you can import your transaction history. One of the methods is what we call an API sync. It's sort of like a data feed. Basically, you give us permission to access your CoinSpot account to read the transaction history into Syla. And the other method is what we call a file import. So this is where you would log on to the platform, export your CSV files, and then import them into Syla that way. Sometimes one or the other is recommended. Usually we prefer the sync feature because it's a little bit easier, but it does depend on the platform, which one is sort of supported and which one is preferred. So what I'm going to show you now is the sync feature for CoinSpot, so you guys can get a bit of better understanding of how that actually works, because it may be new for some of you as well. Basically, what you're going to do is, follow these instructions that we've provided on how to do this, and then you'll be able to generate that API key and pop it in. So that's what I'm going to show you now. So if I swap over here to CoinSpot, so this is sort of like a demo CoinSpot account. It's like a proper account on CoinSpot. It's just got a small amount that we use for testing. If you're like a CoinSpot user, it's going to look exactly the same for you. But what you need to do is go to your settings page here, and there's a setting down here called API, and you just click that. And then what you can do is follow these instructions to generate an API key. So what is an API key? It's basically like a sort of like a password that you create that gives permission to other systems like Syla to request your transaction history from CoinSpot. So I'm going to explain how that works, because it's really important that you understand this. Is most of the platforms have 2 levels of access that you can give when you generate the API key. One of them is something called read-only. So this is when you generate the key, you only give us permission to read your transaction history only. And the other option is full access. If you click full access, it gives them permission to actually trade on your account and also withdraw your cryptocurrency as well. So that's sort of a little bit of a security issue. You should never give us full access. You should always make sure that when you create an API key and put it into another software, is to make sure that you always selecting the read-only options and making sure that that's the only sort of access that you're giving. If you give reader-only access, then it's very safe to generate the keys, put them into Syla, because we'll only be able to read your transaction history. For CoinSpot in particular, we'll actually test the permissions that you give us. So if you accidentally give us full access, we'll actually say, hey, you know, you've given us too much permissions, we're not accepting the key, you should delete it and then try again and make sure that you give us the read-only access. So it's just a sort of a question that we get asked a lot. So just
Where
make sure
would there be a use case that you would want to give somebody full access that they can like withdraw and that? Like you would think that they would even want to have that as a, you know, are you sure you want to give full access? Because I could see that opening up a lot of mistakes by giving people full access.
Yeah, that's right. There's definitely use cases, but there's no valid use case for tax or accounting software to need full access. So you'll never need to give us that. We definitely only need that read-only access. Why this feature exists on the exchanges is usually if you're using maybe like an automated trading system, or you have some other software that you use for interacting with the exchange platform. That's when you may want that full access, because you do actually want to, you know, you want your program to trade through the API like that. I think for most people, it's like that read-only is the one that you're really going to want to use, and you'd only choose that full access if you really sort of know what you're doing right. So, but that's the usual sort of reason. So I'm going to show you how this actually works as well, because you may not have seen how these API keys have been sort of generated. But if I just click here, and then you follow those instructions, the good thing on CoinSpot is they do pre-select that read-only, so you'd actually have to change it to get the wrong one, which is fantastic. You then type your API key name in, which is Syla in this case. And then most of the platforms will ask you to authenticate. So if you have like a two-factor code, you'll need to enter the two-factor code. I'm just going to quickly find mine on my phone and enter that as well. Here we go. Okay, that's good. No. Let me just try that again. I see. Yeah, it's already logged me out of my other email, so I'll just quickly do this. Okay, so I've just like got the link from my email and put that in. So sometimes I'll ask you to authenticate with your two-factor code and then also by email, because it's like basically the same as creating a new password for your account. They're usually like quite a strict process of setting up that key. So then for CoinSpot, what you do is you would then copy this key here, which is the public key. There's usually two. So you just copy that. go back to Syla, and then paste it in here. And then you click this view secret. So if there is a secret key, it's only shown once. It even tells you here, right, one time only. So then you copy that and then also paste that into Syla. And then when you're done, I mean, you can close this as well, but you'll see that that secret key is no longer available. So a lot of the time you only get the opportunity to copy that one time and then it disappears. And then once they're both here in Syla, you just click secure sync. And what's happening now is Syla is using basically that password to go to CoinSpot and say, hey, can you please send me all the transaction information for that account so that then it can import it into here, into Syla. So you can see here now that your CoinSpot account's been added. There's 489 transactions on that account. If you click here, you can also open that up and have a look. So there's all the different, the holdings on the account for each asset, the current sort of market values, all that information comes in. So basically everything that's happened on CoinSpot, you now have a record of that in Syla, and then we can start to do those tax calculations. Now you may have other platforms, so you're not restricted to just doing like only your CoinSpot. So I'm also going to demonstrate another way that you can import data, which is for our CoinJar integration. So if you click here, the process for this one is a little bit different.
Nick,
It's
just
called
a second, someone's saying the screen is not updating. I can see the screen. I see how to connect to CoinJar and add data source. If I can get some other thumbs up, if everyone else can see it, maybe it's just this one person. Can everybody see? Yeah, all good. Okay, so I think it might be Sheetal. I think it might be on your end because I can see how to connect to CoinJar and add data source. So, all right,
okay,
awesome.
Awesome. Yeah, so this is like another one of our integrations for CoinJar Exchange. The process for this one is a little bit different. We call this sort of like our connect. Basically, for some of the data sources, there's just a big button that you can click. So if you click this here, you may not be able to see this on your screen, but basically what happens is it'll ask you to log into your CoinJar account. So if you're not already logged in, so I'm just logging into that. You may not be able to see because it's on a different sort of browser tab, but you'll just put in your details to log in, and then what's happened is we've requested like that read-only access. So we've now connected to your CoinJar account, and then you can just click secure sync here. So the process is actually a lot simpler. You don't have to sort of generate those API keys. It's sort of done for you. You just click the connect button. You click the accept to connect to CoinJar, and then we're able to import all the transactions from your CoinJar account. So that's another way that we're also able to import the data. It just depends like which platform you have, because each of them can sometimes have different methods of how we do that connection process. So I thought I would also show you that as well. So once again, you can click here, you can have a look through. Here's all the different sort of balances that you have on that platform and all the different transactions. Now I'm going to show you one last one, which is sort of the final way that we do connection, which is for CSV file. So in this case, I'm looking for SwiftX. You can click on this button. We do support an API for SwiftX as well, but in this example, I'm going to show you the file import. So, in this case, you would log into your SwiftX account, follow the instructions here to find where the CSV file is, and then you just export that, and then you can upload it into your account here. So I've already done that, so I'm not going to show you, logging into the account or anything like that, but I've already downloaded the CSV file, and then I'll just drag it on here. So you can see that the CSV files come in because I've just dragged and dropped that in. And then you can click secure import, and Syla will go through all of that file and import the transactions that are in there. So you can see here, once again, all the transactions have popped up. If you open it up, you can see more of a breakdown of each asset, and all that information is there. So that's sort of like how you get the data in. The next step is that you can review your transactions. So if you swap over to the transactions page, here is where you can see the list of every transaction that's been imported across all those different data sources. So you can see here, there's lots of these interest payments that have been received on the CoinSpot account. So this is from one of their earn programs for Algo. If you click on the transaction, you can see more detail about it as well, if you really want to see exactly what's happened. If you hover over here, you can see in this example, it's actually like a tiny, tiny amount of algo that's been earned. So it's like 0.000 sort of 3 cents. So it's a very small amount, but these payouts are occurring on the account. So we do import those and track them. And technically, each of these is like a small source of income. And we also track that asset for the CGT calculations as well. It's important that we do track all of these because they are taxable, and also to make sure like your balances actually add up and you can understand what's happening on the account. So if you scroll through here, it's not just all interest, there should be some other transactions as well. So you can see here, there's an example of a trade where someone's sold their XRP. You can see here, there's a bit more information about, the asset that was sold, which one you got in return. There's also a brokerage fee here. If you scroll down, you can also see in this section where we have the tax outcomes. So, those capital gain and loss calculations that we were talking about before that I was going through with you, these are all done automatically for you now, and you can see those tax outcomes here for each of the transactions. Rosie's asked a question about, can you do an import from a wallet address? The answer is yes, we do support MetaMask and Ethereum. So if you have a Ethereum public address, you just take that address and you import it into the data source. So I can quickly sort of show you how that would work as well. So if you just go here, you can search for MetaMask because we do have that one. Click here, you just take your wallet address, which is your public address, and you copy and paste it in here and click sync. And we actually go directly to the blockchain. We pull in all those transactions. If you have things like you're using like Uniswap, so any sort of swaps that you've done, liquidity pools, will also import those. There's a follow-up question about other chains. The main support is for Ethereum at the moment. We do support some other blockchains as well, but they'll be through like a CSV import. And the team is sort of like developing additional direct blockchain imports as well. If you use something like a Ledger Nano or a hardware wallet, we also support like a CSV import for those. So you can go into your Ledger software, export the CSV file, and then you can import that into Syla. We have a Ledger data source for that. So that's another way that you can import those wallet transactions. Once you're done going through all the information, you can go to the tax reports page. So once you're sort of happy with all those transactions, and here is, you can select for whichever financial year you're interested in. So if you get a subscription in Syla, you actually have access to all of your financial years. It's not just for 1 year. You have access to all your historical ones and the current one. You can see here a summary of all the tax outcomes. And here's a different source of reports that you can download as well. So I'll just like sort of download this report to get that going. We also have some sort of supporting documents you can download, so different tax outcomes and transactions. But this is the main one. So this one contains all your tax outcomes. If you scroll through here, I won't show everything, but I'll show the most important sections. So this is just a summary so far. And here's the summary of the tax outcomes that occurred for that financial year. So here you can see the total capital losses, the short-term capital gains, long-term capital gains, if the CGT discount could be applied or not. And then we have those numbers. So these are sort of the numbers that you would enter into your tax return. We also have a breakdown for any foreign currency gains. If you actually traded a foreign currency, such as US dollars, we will treat that separately and capture that here in this section. And then if there's any other sources of income, these would be recorded here. So they're those things like interest, like from an earn program or staking or airdrops that you've received, they would all go here. and then any other sorts of sort of income as well. So there's a little bit more information later on, which gives you a bit more breakdown, but this is sort of the main section that you can use. Now, there's one last thing that I wanted to show you as well, because we sort of talked about the first in, first out, and the lowest tax first out, and those sort of different parcel methods. So I picked this example especially because it actually does have a noticeable difference on the tax outcomes. So if you look here, like we do have this summary section as well, and you can see down the bottom sort of what the total tax outcome is, or you could look here and see, what's the total capital gain that's occurred. So in this case, it's 34,444. This is the capital gain that's going to need to be declared. If you go to the settings page, you can actually modify the parcel method here. So you can click edit, and you're actually allowed to change this per financial year. So if you've used first in, first out in the past, you can continue to use that for the prior years, but then you can change to lowest tax first out sort of for the future years. It's up to you. But I'll just change this one because this is the year that we were looking at. So I'm just going to change it from first in, first out to lowest tax first out. Click save. And basically, Syla is going to redo all those tax calculations using the new method. If I now go back to the tax reports page, you can see that, the gain is no longer 34,000. Now it's been reduced down to 16,000. So for this particular data set, the improvement is like really quite dramatic. It's really good. And this is a great way where if you use one of those more advanced parcel matching methods, you can actually derive like a much better tax outcome for yourself as well. Cool. So guys, that's basically it for the demo. There is one more question here from Kelly, which is about Exodus Wallet. We do actually support Exodus as well. So if we add data source, search here, we do have the Exodus data source supported. So you just click here, follow those instructions, depending whether you are using Exodus on your computer or on your mobile. And then you can do an export and then upload it here. So you can also import that way, which is really good. The other good thing is, like, if there's a data source that's not supported in Syla that you do need, you can just reach out to our support. We will be able to usually like add support for that, particularly if it is like a CSV file. There's usually a way that we're able to help you get that imported, which is really good. Cool. So I'm just going to close that now.
Yeah, so Kelly has one more question. There are some other questions that are further up, but we'll just because her question is related, or their question, actually, I should say, is related to the demo. Does the software consider and suggest the best parcel methods for the current tax year?
Basically, LTFO is always the best method. So that's sort of the strategy there. We look at all the parcels, and whichever one is going to be the best one, that's the one that's going to pick. So if it's like a new account and you haven't done the tax before for the crypto in the past, then you basically always choose LTFO because that's always going to be the best method. The only reason that you might vary it is because you have maybe used, for example, first in, first out in the past. So you can't apply LTFO for your prior year if you already lodged it using first in, first out, because that's going to maybe materially change your tax outcome. So that's why we allow changing it for each year. So if you used first in, first out last year, you can still apply that in Syla. Then you can change the current year to LTFO so that you get the better tax outcomes going forward.
All right. Before we jump into the questions that were earlier, I have a couple of questions in terms of if you have an accountant, maybe that don't necessarily specialize in crypto, but you've had an accountant for ages. Do you need to go in and set all of this up and connect everything because they wouldn't have access to your accounts? Like, so for example, when you guys did my taxes this year, and how, like, I still gave you guys the CSV file. So did you just upload the CSV files into the software rather than if you go and connect it manually? Does that make sense? Have I asked that question clearly?
Yeah, I guess like you've got like a few different options, like how you'd actually want to approach like doing your tax. If you use a tax agent to help you to do that, then there's two ways that you can do it. One is you can recommend to them, hey, like about this software, Syla, you can set up the account, generate the report yourself, and then you just take the final report and you can give it to your tax agent, and then they'll take the numbers off the report and use that when they're preparing a tax return. So that's usually the simplest way. Otherwise, if they're familiar with the software, they may use it for you. So that's how yours probably would have been done, Danielle. So in that example, your tax agent just requests usually like your CSV files. So you would like log into your CoinSpot, export all your transactions, and then you just send those files to your accountant. Yeah. And then internally, what they're actually using, they've got a Syla account there. They just take your files, upload it. They've got an account set up for you, and then they do the calculations for you that way.
It just saves you a few different steps, I guess, because for me in the past, but because you guys have been my tax accountants for years, even before Syla came, I always had to go download the CSV file, send it. Now, if I wanted to, I could go and set up the APIs and it could all be there. And then I guess I would be able to see it in real time rather than if I just stick to the old school method of downloading the CSV files and sending it to you, then I actually don't have that visibility of the transactions inside my Syla account. Is that correct?
Yeah, that's right. I guess like both models can sort of work. Yeah, it just depends. It's like some people like maybe you don't want like an extra piece of software. You'd rather just like let your accountant handle it, and that's perfectly fine. And then some people, like if you want to like take a bit more ownership over the process, then maybe you want to sort of set up and manage the account yourself. So it just sort of like depends which you prefer. Because, we know like not everyone loves doing their tax, and probably no one really, really loves doing it, right? But it's sort of something that's necessary that you have to do. So we try to make it sort of as painless as possible. That's the goal.
I like paying an accountant. For a little side story, years ago back in Canada, my ex and I always just would do our taxes ourselves. And then I said to him one year, I was like, no, I really think we should get an accountant. And every year we used to pay tax. And then the year that we got an accountant, we actually got a refund. So I generally, not that I'm recommending or, but I just feel that generally they know all of the tips and the tricks that can potentially, so they can usually pay for themselves. So ever since then, I've always paid an accountant. Great. Okay, we have a couple of questions. I'm going to scroll back up to the top. So this one's from Jen. With the parcel selection, can you choose different methods for each CGT event, or once you choose a method, that's it?
Yeah, so you can't choose each event, which parcel you want to choose. So you can't manually select each one. The reason is like this would be very time consuming normally. So we haven't implemented it like that. Basically, the choice you have is you get to choose each method per year. So if you want to do first in, first out for 1 year and then LTFO for another year, you can do like that. I think like the reason for that is like most of the time, almost everyone would prefer to just have lower tax outcomes. So it just makes it a little bit simpler. You don't have to like manually select those parcels. And while, like if you're sort of used to doing CGT tab calculations for shares, for example, and maybe, it's sort of like semi-common that you would do it that way, but that's because there might only be like 10, 20 trades. With crypto, there tends to be sort of hundreds and thousands of CGT events. So you don't really want to go through each of those manually. And that's why we just pick that overall algorithm and use that.
All right, good. Thank you. Next question. Sorry, I don't know how to pronounce the name properly, so I'm not going to butcher it. How crypto staking is taxed? So the staking would be considered an income?
Yeah, so this is a source of ordinary income. Basically, that crypto is like something that you've earned. So what you would do is on the day that you received the cryptocurrency, you would record that and the amount that you got and which asset it was. And then what you need to do is calculate the Australian dollar market value of the cryptocurrency that you received. And that value would be your income from the staking. So you probably don't want to go through each of your little staking payouts. That's another reason why you would just import those transactions into Syla. And then Syla actually automatically does those valuations. So each quantity of each crypto that you got, we look up the Australian dollar market value and we apply it to it so that we're calculating the correct amount.
All right, very cool. I believe there's another question. Okay, we already went through all those ones. Couple more from Kelly and Jen. So, how does Syla compare or differ from crypto tax calculator?
Sure. So there's like a few different sort of software products. I'd say the main difference is that Syla is sort of exclusively for Australian tax. So we're not trying to do tax anywhere else in the world. You know, we have very different tax legislation here in Australia versus say overseas in the USA or UK or Canada or anywhere like that. So we're very specific. That does come through a number of different ways. One is our support for Australian platforms is really, really quite good. So we spend a lot more time doing those integrations with the platforms like CoinSpot and CoinJar and the other Australian platforms. So the data comes in really well, the balances add up, and the transactions have been classified correctly for you. And the other main benefit is we do have those like algorithms, like the lowest tax first out. So you won't find that in other software products because most tax jurisdictions around the world don't actually allow you to choose any method. You normally are restricted to using first in, first out. It's a very special thing that we're allowed to do here in Australian tax. And that's why we've implemented that. So you are able to actually get better tax outcomes using Syla.
Very cool. All right. Jen thinks that you answered in the demo. So is the ATO okay with you having a different method each year? Yes.
Yeah, I mean, the way it works is it's not like there's no real methods that are approved by the ATO for this purpose. We can send you through some information, like you can, there's like a ruling around this about how it works. So basically, if you can't specifically identify the asset that you sold, then provided you have correct records, you're allowed to choose and apply any method that you want. So I guess like the short answer is yes, like you are allowed to choose whichever parcels you want to dispose, however you accomplish that, provided you do have that record keeping and you are keeping track of the assets.
All right, we're going to finish it up with this last question. Does Syla handle and recognize NFTs?
Yes, we do. So for your Ethereum imports, for example, if there's NFTs there, we will import those. And we do treat them a little bit differently for tax because they're non-fungible. So we won't apply like LTFO for your NFTs. Basically, whichever NFT you bought and whichever one you sold, we are able to identify it. So that's the one that we calculate that you sold.
Very cool. Well, thank you. I definitely learned a lot tonight. And even though I pay you guys to do my taxes every year, it's still good to have a good foundational knowledge of this. So for anybody that is interested in getting their hands on the software, there is that A2B tax saver code that they've offered a 20% discount. Could you just take a little bit of a step for them? Because I know that they can also create an account and go in and check it out without paying. So maybe if you can just give them a little bit of an overview if they were interested on maybe checking it out first before actually signing up, like what would that look like for them?
Yeah, sure. Yeah, guys, it's like really easy to sign up for an account. So you can just pop your email address in, register an account. There's no cost to do that. So sort of intro plan is completely free. You can add your different data sources. So all the data sources that I showed you today, you can connect those up. You can sync your data in. Once again, there's no cost. That's all available on the free plan. You can look through all your different transactions. When you're ready and you do want to like generate a tax report, then that's when you can purchase one of the subscriptions. That gives you access to download those final PDF reports, some of the other reports, depending which plan you get. And yeah, when you do check out, so if you do sign up for one of the subscriptions, please like apply this discount code ATB tax saver, because that will give you a 20% discount across any of the plans. So it doesn't matter which one you pick, you'll get this 20% discount, which is really good.
Perfect. Well, thank you so much. Thank you for everybody that tuned in, and for anybody that knows someone that thinks that they'd get value. This session was recorded and we will share the recording. So once again, thank you very much, Nick, for your time today. And for anybody else that is local in Brisbane, join us on the 6th of September, where we will be actually talking about crypto onboarding, aka debanking, and the future of stable coins. And we're actually giving away $500 in stable coins as well. So highly recommend everybody come down and tune into that. Anybody wants more information for Syla, what would be the best way if they had more questions for them to reach out? Just reach out? Is there a customer support service, or should they reach out to you directly? What's the best way for somebody to get in contact with you if they want more information?
Yeah, just jump onto the website. We have like a live chat there. So if you have any questions, just ask the live chat. Probably be myself responding or one of the other team members. So yeah, feel free at any time to do that. We're team's happy to help you.
All right, perfect. Well, thank you very much, everyone. Enjoy the rest of your night, and I'll see you all soon.
Thanks, everyone.